Let's start with the main story of the week, because Bitcoin has just clearly entered a macro-driven phase. Over the past few days, BTC moved from around $68,000 to $72,000 not because of crypto-specific developments, but due to geopolitical headlines around US-Iran tensions and potential ceasefire signals. According to Bloomberg and Reuters coverage, Bitcoin hit a 3-week high near $72.5 thousand as markets react to de-escalation expectations, while earlier reports showed BTC dropping towards $68.5 thousand during rising tensions. This is kind of price behavior, sharp moves in both directions tied directly to headlines. Confirms what analysts have been pointing out. Bitcoin is now trading like a global risk asset. What makes this even more important is the scale of market reaction. Data shows that a single move triggered over $200 million in short liquidations, accelerating the upside and creating a classic squeeze dynamic. At the same time, traditional markets moved in sync, with equities rising and the dollar weakening as risk appetite returned. This alignment between crypto and traditional finance reinforces the idea that Bitcoin is no longer isolated, but deeply integrated into global liquidity cycles. Now, over to institutional flows, because despite this volatility, capital is not leaving the market. Data from early April shows that Bitcoin ETFs recorded nearly $700 million in inflows, including a single day with over 471. Major players like BlackRock and Fidelity led these flows, signaling continued institutional interest even in uncertain conditions. However, analysts stress that while money is coming in, it is not creating a clear upward trend, which suggests a more cautious positioning strategy rather than aggressive accumulation. This leads directly into market structure. Bitcoin has been trading in a wide range, with no sustained breakout in either direction. Analysts describe this as a consolidation phase driven by external catalysts rather than internal momentum. In practical terms, this means the market is waiting for a decisive trigger, most likely from macro data or geopolitical developments. Looking at the broader macro picture, reports highlight that oil prices and inflation expectations are also playing a role, with oil trading above $100 at times, increasing uncertainty around monetary policy. At the same time, de-escalation signals have pushed global markets into a risk-on mode, bringing capital back into equities and crypto simultaneously. This reinforces the idea that Bitcoin is now closely tied to global financial conditions rather than operating independently. So what does this mean for the week ahead? Analysts are outlining 3 main scenarios. First, if geopolitical tensions escalate again, Bitcoin could break below the current range and move sharply lower. Second, if de-escalation continues, like the ceasefire, the macro data supports risk appetite. BTC could break above 72K and attempt a continuation toward recent highs. Third, and considered the most likely scenario by many, is continued volatility within the current range, meaning fast moves in both directions without a clear trend. Overall, this week marks a clear transition in the crypto market. Bitcoin is behaving more like a macro asset, institutions remain active but cautious, and price action is increasingly driven by global events rather than crypto-native factors. Short term, the market is volatile and reactive. Long term, however, the integration between crypto and traditional finance continues to strengthen, suggesting that Bitcoin's role in the global financial system is expanding, not shrinking. That's today's Kanga Crypto News. If you enjoyed the episode, like, share, and subscribe to stay ahead of the latest crypto developments. And see you next week.